Good morning, everyone, and welcome to this morning's session. Thank you for making the effort, and really appreciate seeing everyone here today. We've got a really interesting panel today. I'll do a bit of an intro in a minute to get us up and running, but I first wanted to introduce my panelists. So, Warren, could you kick us off, please?
Yeah, I'm Warren Rickson. I'm from Standard Chartered, not Olam Global Agri, as it seems to say. You're working on the credit insurance desk there.
Hi, I'm Serene Su from Marsh Specialty. So I head up the political risk and structured credit business for Marsh in Asia.
Thanks, Serene. Sam?
Hi, I'm Sam from Chubb. I head up the credit and political risk business here in Asia.
Over to you, Chris.
Hi, and I'm Chris Sawyer from Liberty Specialty Markets, and I head up the credit and political risk here in Asia.
Excellent, thanks a lot. So this morning on the way here, I thought it would be a good place to start by reflecting on where we were this time last year. So I was diligently scrolling Google to find some very insightful news articles that would really capture the spirit of the time last year. Sadly, there weren't any. So all I could find this morning was that this time last year, El Salvador had adopted Bitcoin as an official currency, and Ronaldo had broken the world record for the number of goals scored in international football. So therefore, it didn't necessarily reflect the spirit of 2021. But I think it's safe to say that 2021 was a year that we had high expectations for 2022. The expectation, obviously, that we would be coming out of COVID, that the world would be normalizing, and there was even talk of a roaring 20s. Well, how far are we away from that? We will discuss today, but I think it is safe to say that there are a number of challenges that we have faced this year that really are quite unprecedented, and we will go into some details around those. But I also think, and we really do want to underscore the fact that there has been a lot of interesting transactions and areas of focus this year in 2022. So there is a contrast between these two polarizing aspects of unknown and unprecedented risk horizons, but coupled with a very positive and encouraging developments in new areas and technologies and placements. And we'll talk about those today. So I guess this will kick us off, Serene, from a fellow broker's perspective. How have you seen clients manage those two contrasting worlds of the challenges and the opportunities? What sort of conversations are you having with your clients right now?
Thanks, Lee. So I think at Marsh, I think what we have seen from our clients is more inquiries in political risk insurance. In Asia, I would say since the late 2000s, maybe 2007, 2008, 2009, the focus has really been on credit insurance. So everyone's always talking about non-payment, what do I do if my debts are not repaid on time? But given the events in the last 18 months or so, I think a lot of focus now has shifted to political risk, right? So you have the Myanmar coup in February 2021, you have Ukraine, Russia crisis this year, you have Sri Lanka, sovereign debt default. So I think all these events have made clients very aware of political risk. And I think when they look at their assets, the interest is not across the board, so they can be very specific. So we see people concerned about currency controls in Myanmar, and in Asia, we've actually not had any currency control since, I would think, Asia financial crisis. I think back then Malaysia had some form of currency controls. And then people are concerned about investments in emerging markets because of political violence. So it could be linked to sovereign debt default, social unrest, people are unhappy, and your assets there may then be hit. So very specific concerns, our clients have been talking to us about them. And so at Marsh, we actually partnered with IHS Markit earlier this year. And we started working on studying, like, is PRI insurance, is political risk really just a cost that you would have to pay to protect your investment? But I think what the study has shown us is that PRI can be used to actually bring down your country risk premium. So I think for our investor clients, what they are seeing now is that actually they shouldn't view this as a cost, but really it's something that should be built into their models because it will improve their rate on investment.
Yeah, that's a great point about PRI, and I think you're absolutely right to see how the market has changed. Obviously, past 10 years, banks were heavy users of the product from a capital perspective. Obviously, Warren can comment on it later, but actually seeing how products like PRI are having real value and relevance to clients. From an insurer's perspective, Sam, obviously there's been a few things going on, keeping you busy, hopefully not awake at night, I guess. Is that sort of PRI trend something you're seeing? Are you seeing clients being impacted by the events in Russia, Ukraine? What's sort of your thoughts and take on the world?
Yeah, I mean, I would say, as you said, we thought 2022 was going to be a booming year after COVID, and we were going to come back out. The risk environment was going to improve, and I am going to try and be positive at the end of this, but a bit of doom and gloom first. I am an insurer, so. So for clients out here in Asia, there was a bit of a time lag, I would say, a 2 to 3 month time lag from Ukraine and Russia, where obviously Ukraine and Russia events impacted the market in London and my colleagues in London almost immediately, where you saw political violence claims in Ukraine, credit claims coming out of Russia, which luckily haven't been as substantial as we thought they would be at first, as people have managed to reduce their exposures. And then, you've obviously got the more traditional political risk, expropriation type perils emanating out of Russia. And, that's still very much a work in progress, and the market's working through a number of those issues, but we expect to see some additional claims there. So you sort of had that environment in Europe, and speaking to my colleagues back in London, they were talking about sort of 20 to 30% rate increases on PRI policies, lots of inquiries. Whereas here in Asia, there was a sort of 2 to 3 month period where trying to convince brokers and clients that, actually, this is going to have a knock-on impact to the market, and that we are going to have to start to see rate increases, did take a while. But unfortunately, or fortunately, I should say, in the last sort of 3 to 4 months, those pressures have sort of deteriorated the risk environment here as well. You've had inflationary pressures, you've had China slow down, how are they going to get out of their COVID zero policy? You've had increasing geopolitical tensions within the region. And as such, I think the conversation now is a lot different to what we had before. So having discussions about rate increases and increased risk environment is a lot easier, and I would say the flow is a lot better. We're seeing a lot of risk at the moment, a lot of it good risk, but we've got to work through it with the clients, and we've got to pick and choose our way across the board. But I would say broadly positive, because we can sell, hopefully we can sell credit and political risk. There's never been a better time. But
We'll see after this.
Yeah, exactly. I've got to be careful what I wish for. But it is in a deteriorating risk environment. So I think that's a process we're going through now, but it is a positive conversation, and there are good flows at the moment.
Good. Well, I'm pleased to hear a positive end to that piece. Chris, from your perspective, from Liberty, obviously Sam touched upon there about Russia and Ukraine, but I guess slightly more closer to home in this part of the world, China and the potential developments there, obviously, is something that we're all following quite closely. How's your thoughts, and how are you guys seeing the world, and what's your sort of viewpoint in terms of where we're going?
Yeah, sure. Without repeating some of the stuff Sam said, I think generally, if you just look around the world, it's a really challenging risk environment. You only have to turn on CNBC, and you hear all these stories of the stock market being off sort of 20, 15%, depending on which index. Bond markets are cratering, and investors globally are just looking at where they can deploy capital and where to take risk, and I think underwriters are the same. It's a very challenging risk environment. We're looking at China. I think we're seeing a lot of moving parts there. I think if you're looking at different sectors, you also have to be mindful of potential regulatory interference. We've seen what's happened with the housing property sector, but also the tech, education, health. So it's a very challenging risk environment, but not just in China. globally. So, I mean, to Sam's point, I mean, we're being very selective around risk, picking our clients, really understanding their needs, and working through them to provide solutions. It's just really important to be managing this part of the cycle and making sure that pricing adequacy is there. So definitely challenging, but there are also opportunities.
Yeah, absolutely. No, I completely agree. And I think opportunity is something that we'll spend a lot of time to focus on.
Sorry, can I just say?
Oh, sorry.
One of the other challenges I was just going to say was along those lines of clients finding it difficult to where to deploy capital. In these challenged risk environments, everyone looks to flight to quality. So one of the challenges that we're seeing is that our clients, and probably Warren can follow up with this, is that it's very competitive in the bank market, with banks all chasing better credits. And so we're finding that our clients are getting signed down, and on the better credits, they're getting less of an allocation, and that's sort of leading to margin compression. So, to getting the rate increase that we want, it's not always easy.
Yeah,
sorry.
No, yeah, absolutely. So, Warren, I guess from your perspective and from Standard Chartered's perspective, obviously you operate in some very interesting geographies around the world. You're obviously having to constantly balance this risk and opportunity paradigm. How are you sort of seeing your activity, your lending activity? How are you obviously using, you're a significant user of credit insurance? How are you seeing that, and where do you see that going forward and navigating the current environment?
Yeah, I mean, I think Chris summed it up pretty well, that there is that flight to quality in the market at the moment. The transactions that we want to do are the same transactions that our competitors are wanting to do as well. And so we're finding that there is still some pricing compression that is happening and scale backs that are happening, which is limiting at times our ability to buy as much credit insurance as we would like to do, or certainly as I would like to do. We are still operating across our footprint, which is Asia, Africa, Middle East, and we have strong presence on the ground, and we'll continue to operate in these areas. And what we're probably seeing more of is opportunities to work on transactions that are a little bit more structured, and still strong credits, but you go a little bit down the credit curve and have a stronger structure around it. And I think that's the opportunity where credit insurance is proving to be quite valuable.
Yeah, no, absolutely. And I think to that point about the value of credit insurance, earlier this year, I think about a month ago, there was the global claim stats that were just produced. And it was very encouraging to hear that there was just over $1 billion of claims paid in the structured credit and political risk market, none of which were compromised, which is fantastic for everyone involved in the industry. But I guess what is interesting, if you look at those $1 billion of claims, the question really is in the grand scheme of things, given what was going on last year, that's a relatively small number by comparison to what I guess people first thought. So, from an insurer's perspective, Chris and Sam, I guess for you guys as well, that is a reflection that it was a relatively benign claims year. But did you see any points where you could see the state support and where you thought claims might come in, but in fact they didn't actually materialise? Sam, over to you, mate.
I mean, I think over COVID there was definitely a period where obviously there was a lot of liquidity in the market. Central banks were pumping cash, and lots of people's balance sheets expanded. So I think from a claim perspective over COVID, there definitely wasn't the wave of claims in the credit market, at least, that we thought there were going to be. I suppose out here in Asia, what we had right at the start of COVID was there were a couple of high-profile fraud cases in the trader space, and these are well publicized, and I think that obviously there were claims on some of those as well. But generally, it sort of pushed it out, and then I think the Russia-Ukraine events and all the risk issue that we've been seeing now is putting additional pressure on a number of those transactions that were potentially wobbling before, and they're probably going to go the wrong way. But then on the flip side, we've had a number of transactions which we thought there's no hope in hell that these are going to work out, and suddenly there's additional investment or there's a bailout or something like that. So we've had both sides of the coin, I would say. We've had some positive things happen and we've had some negative things happen, but we still think there's more to come. So Sri Lanka is a classic example where the default there. I mean, there's an IMF package going in at the moment, but I think the market's got exposure to Sri Lanka as well, so there'll be some claims coming out of that.
Yeah, Chris, you seeing a sort of similar situation, and maybe the prospect of inflation being something that you guys are monitoring?
Yeah, we're definitely monitoring inflation. I mean, in terms of claims, we've been very similar to Sam. We've been lucky with some situations that have worked out well. Again, picking your clients and working with them, we've been able to work through reschedulings and restructurings, and
it's called good underwriting, Chris.
Yeah. Client partner, relationship's been.
But I'd say it's more broker actually.
And then we've also had some situations which haven't gone so well, and we've paid some claims, but nothing nothing that's going to cause too much concern. Going forward, actually, when I look at our book compared to our global book, I think we've probably the loss emergence has happened faster here than I would say in other parts of the book. So, looking forward, yes, of course, inflation is a thing to consider when we're underwriting now. But looking at inflation, that hasn't led to us being more concerned about the current portfolio. So.
Yeah, no, actually, Sareem, from your perspective, from broker's perspective.
Yeah, so I think from a broker's perspective, if you talk about the short-term claims, so during COVID, I think the short-term trade credit insurance side, there was definitely a big jump in terms of number of notifications. But a lot of these actually worked out because be it sellers or lenders, you're willing to extend some payment terms, do some bit of rescheduling, and eventually the money came back. So I think most of the COVID claims that we were worried about didn't happen. But I think for the structured credit political risk space, that's where you're talking about the commodity claims. I suppose they did happen, but what we have seen is that I don't think these claims were caused by COVID, right? So they were underlying issues in some of these obligors already, but COVID and the inability to recycle the liquidity, so that's what brought all these claims to the forefront. For Marsh, I think, I actually did a check. So I think in Asia, since 2019 to now, we've actually helped our clients pay out or obtain about 310 million of claims. So this is in Asia alone. And then for Ukraine-Russia crisis, I think underwriters have been put on notice. We don't have the exact amounts yet, of course, but I think we are currently actually managing claims in Myanmar as well as there will be claims in Ukraine.
Sorry, just a quick question. In post-Russia-Ukraine, have you seen notifications go up or down compared to COVID?
When it first happened, I think notifications went up. So even on the short-term trade credit side. So I think there were suppliers who may have been selling not necessarily into Russia, it could have been somewhere else in Europe, but the buying entity, the obligor, could be incorporated in Russia. So I think there was concerns about would they be able to make payments, would sanctions kick in? So I think there was those concerns, but we have resolved it. So I think on the credit part of it, that has been resolved. So I think for Russia, Ukraine, what we are really seeing now is we're just waiting for the PV claims to eventually get the number in, and then we'll come to you soon.
Yeah.
Hopefully not.
And Warren, from your perspective, from a bank's perspective, in terms of MPLs or reschedulings with clients, are you seeing that sort of starting to trickle into your world, or is it that actually interest rates might be, or increasing interest rates might be more of a challenging for refinancings, etc.?
Yeah, I mean, I don't think we've seen too many more non-performing loans. I think it's remained kind of par for the course, certainly in the space that I've been working in anyway. From those statistics, so I think from our side, it's really key to see that every claim was paid in full on time, and it really underlines the efficacy of the product. It adds a lot of weight to the job I'm doing at the bank, in that it is a product that works. And I think that's probably like the most important thing to note.
Yep, no, excellent. I fully support that that sentiment. So I think that it's probably opportune now to start to move into sort of slightly more positive tone and to really sort of focus on some of the interesting things that we have been witnessing in 2022. And I think one of the areas that we've definitely seen at WTW and we've been sort of delighted to be part of is in relation to the market's appetite for ensuring renewable transactions. Chris, from your viewpoint, obviously this is an area that you've been looking at quite closely as well. Where do you sort of see the types of transactions you've been working on, and where's the opportunities in that space?
Sure. The renewables, I mean, there was a lot of Taiwanese offshore wind, 18 months ago, 2019, I think it was, when they were first coming to the market. And there's also a huge opportunity potentially in Korea and Japan, but that's probably been a bit slower than we were led to believe. But I think one of the bright spots has been Australia. I mean, we seem to have been looking at a number of renewable projects for different clients in Australia. Now, it's obviously a very good regulatory jurisdiction. There's some challenges down there with the grid and curtailment issues, but there's a lot of spending going into that space. Yeah. And so there's a lot of opportunities to support multiple clients down there. But also around Asia, we've seen project finance transactions with renewables in Laos exporting to neighbouring countries. So from both a comprehensive non-payment perspective, but also traditional lenders cover. So there's a huge amount of opportunity to support renewables, and the energy transition is not going away, and it's looking a bit more challenged at the moment because of what's happening in Europe, but there's definitely a lot of focus on renewables with us.
Yeah, no, absolutely right. And
just to add to that, and I'd be interested to hear what Warren says. I mean, I think the one frustration we've had, and I'm sure Chris shares this, is how long some of these transactions have taken to close. And there's been a very good flow, as Chris says, but a lot of these transactions have taken a long time. And I'm not going to say why, because I'm not a banker, but I'd be interested to know why aren't you closing them with us?
No, I think there's probably two elements to that. I think one is that the gestation periods for these transactions have taken longer in terms of getting projects actually moving and getting things going. So the financing requirement, you know about the transaction, it's going to happen, but it's not going to actually come online for a period. So the difficulty comes when, if we don't come to you early with the transaction, there's a chance for you to tie up your capacity with our competitors, and us missing out on capacity that we would need. And then similarly, if we come to you late in the piece, even if we're the only one, you start to have questions on your side about why are we coming to you now? Are we concerned? So actually the best thing for us to do is to approach you early when we know we're working on the transaction and to get you moving already. It does mean that you are facing the same long gestation periods that we face, but it's not a major concern.
They'll step in now just in case there's any issues.
I'll just say, I mean, I think the thing is that everyone wants to do this renewable project finance, so it is ultra competitive in the bank market as well. So SCB might have, the best intentions to participate, but it might be done away from them, and then unfortunately, we don't.
Yeah, I mean, I think you're definitely starting to see a level of complexity in the transactions step up, and obviously the request to insurers accordingly. So I think it's been a really good learning experience for all parties, and something that we are all very invested in, and see as a good sort of path to the future. Sam, you mentioned about commodities and some of the challenges we saw, but obviously, sitting in Singapore, a huge commodity hub. Do you see sort of green shoots in the commodity space? Are you seeing sort of new insureds or interest coming?
I think I always need to be careful when I talk about commodities, because it's a sort of love-hate relationship, especially here in Singapore. But you're right, we can't avoid the fact that we're in a hub. But I would say and obviously the volatility is difficult to assess. when looking at risk. But I would say the key positives over the last 6 months, I think, have been that banks and traders have been coming to us with really, really strong credits. So oil and gas majors, some really strong government entities who are looking to lock in long-term LNG contracts. And that's as a result of obviously skyrocketing prices. I mean, they've come off a bit now, but it has been definitely a flight to quality, which I think today we've struggled a bit to see, especially in Singapore in the market from some of the banks and traders. And I think that's a really positive sign. Now, pricing's still pretty aggressive, but they're transactions we just wouldn't have seen before. So trying to be positive, I think it's a good thing. But obviously, that is on the back of, you know, a very volatile, cyclical industry.
Yeah, I would just say, I mean, as well as the physical cargo movement, there's also an increased inquiry flow on hedging these transactions, isn't there? So, you know, that's a new development in the last couple of years in our market. So,
yeah. I guess just looking at sort of new developments and areas of innovation. So I think one of the things that we've increasingly witnessing is where capital market players are trying to find ways to utilize the benefits of credit insurance, which obviously banks have been doing for some time. And there's been a number of repack structures happening in the market now. I think you've been involved in some, Serene, and then also there's some new structures around how we're increasingly using the surety and bond market. Do you want to touch upon some of those?
So I think we have quite a number of commodity trader clients, and given the high commodity prices, there's been obviously some pressures on margin calls. So to help our clients, we've actually used more the surety bond market now. So we're not talking about your typical construction guarantee, construction bonds, but really commercial bonds to help these trader clients to free up capital. So that's all free up collateral. So that's one area we've done. And I think the other one you mentioned was actually repack structures. So this comes on the back of the work we've done with a lot of public agencies. So sometimes when they want to bring in extra capital or extra financing for the transactions, but maybe certain equity funds are concerned about the credit risk or the political risk of the financing. So what we do is that we do a repack structure. We insurance wrap the equity investors portion of it. That helps all parties, right? So the public agency is able to do a bigger ticket loan, helps the country it's in. So we have really done one successfully, and then we are continuing to work in this space. It takes a bit of time, Sam, but we believe this will come to fruition.
A very impatient guy, Sam. Excellent. Thanks for that.
Sorry, Serene.
Go ahead. Go.
I mean, I think that's a fantastic initiative. I was just wondering how receptive sort of the banks and public agency have been to that new initiative. Because I mean, it's stuff we would love to see.
Yeah, I think this started more in Europe, right? So I think it's on the internet actually. So it's like Rixon Bank. So you can Google it, you'll see the repack structure has been done. But we've also been talking to some public agency clients in Asia. So I think what we're trying to do is to really link up the funds with these public agencies and then to provide an insurance structure behind it. Yeah.
Yeah, there's a few requirements that make it a little bit more challenging, that you have to have a pretty sizable sort of margin to make it worthwhile. So I think a few of the deals that have been done in London have been mainly for African transactions. So I guess for this part of the world, you have to sort of make sure the assets are in the right sort of mix. Warren, in terms of what you've been looking at and how you've been using credit insurance, obviously leveraged acquisition financing, fund financing, I know areas that you've been very focused on. Any other sort of areas as well, and your thoughts on those two areas?
Yeah, I mean, ultimately, as a bank, we buy credit insurance for two main reasons. Three real reasons, right? One is to reduce our capital in the transaction, or to improve our returns on the capital, being so 1 and 2. And then the third one is to increase our ability or what we're able to commit to the transactions as well. And I think it's that third piece that's really valuable for the bank in this highly competitive environment, where if we're able to provide bigger tickets, we're able to keep our competitors out of transactions, particularly when it's something a little bit more proprietary. One such example that we're working on at the moment is eventually going to be a portfolio of corporate bonds done as a private placement, structured so that we can benefit from attractive cross-currency swap rates. so we can be competitive in local currencies. And so that's an opportunity where it's outside of what insurers have traditionally been doing, but their ability to, follow what the bank is doing and, take the learnings on board is going to be really valuable to us.
Excellent, superb. Well, great to hear. In terms of sort of final areas of development, innovation, I think Serene, you've been also seeing some new insureds look at the product and come to the marketplace.
Yeah, so I think we've seen new insureds actually. So the focus has always been on the big international banks, right? But in the last, I would say, 18 months, we've actually been working with regional banks. So be it the local Taiwanese banks, we also have seen increased interest in transactions from regional banks in Japan, so not just the 3 mega banks. So I think that's one new client group, if you would call it. We also see new inquiries from, say, insurers, like for example in China, and perhaps they are venturing to like South Asia, and they're concerned about getting contract frustration in case any of the projects are affected by political risk. And perhaps another area, not so much on new insureds, but also new opportunities for existing insureds. So I think this may have been more common in Europe and London, but not so much seen in Asia. Projects like upcycling of waste products. So I think that's something that's relatively new that we've been working on like the last couple of months only. Other areas also like commodity space again, right? So now because of the huge demand in the EV sector, so I think for traders, they are also looking to protecting their sales too, or sometimes procurement contracts on commodities like copper, nickel sulfate. I think all this goes into the battery industries linked to EV.
Superb, excellent. And Sam, from your perspective in terms of new insurers, I think ECAs, multilaterals, you're seeing more activity?
Yeah, I would say just from a broader brush sort of insured perspective, I would say over the last 2 years, we've definitely, leaning on what Serena said, we've definitely diversified our insured base. So we've done some transactions with local Singaporean banks, which we were always working with, but never had done transaction of that sort of size. We've had some Australian banks come into the market where we've done some sizable transactions with as well. And then, yes, we've had ECAs who maybe sporadically bought before. They've come back in and started buying every year. Now, those transactions are usually pretty tough because they're in fairly difficult jurisdictions where they've got high exposures, but especially for the ECAs, we're generally able to get our head around it because of the government-to-government relationship and the strategic nature of the transaction. Apart from that, there's one new multilateral in the region that we've started discussions with, but that's not gone anywhere. I would say that's probably where we're at. But yeah, ECAs, I mean, they're sort of the holy grail for us at the same time, but they're always quite lumpy transactions, which, again, they'll buy once a year. So I think our core business remains, our corporate base, who are just doing traditional trade credit or XOL. XOL, excessive loss, especially now, is a great product to be selling. And then banks as well. And again, I would say we're seeing existing clients with banks, they're showing us different departments. So we're seeing the short-term trade receivable side for the first time from some of them, and we're seeing the longer-term project finance, be it PRI or comprehensive.
Excellent, superb. I think it would be remiss to not touch upon the fact there has been some movements in the market here in Singapore, and recently there has been some exits. I don't think specifically linked to this line of business, but I mean from an insurer's perspective, Chris and Sam, it would be useful, I think, to understand sort of your thoughts on the region, your commitment, what you're looking to do to expand, etc. So, Chris, some thoughts from you, perhaps?
Yeah, sure. I mean, for Liberty, we see this as a huge driver of growth in the future. If you look at statistics from the IMF over the forecast, the next few years, all the GDP growth is coming from developing Asia compared to the developed market. So it's a really important region that we're in and we're supporting. Our strategy is to follow our clients and to be sort of a hub where our clients are based and continually provide solutions to their needs. So it's definitely important that we're here. I think the benefit for bigger players like Liberty and Chubb is, these specialty lines, credit and political risk, it's not really driving the bottom line result of the overall business. So it's important that, we're part of a bigger entity. I mean, for us, Liberty's celebrating 20 years in Asia this year.
It's going to be a big party?
There will be a big party.
Okay.
You're not coming.
Thanks, mate.
You're not invited, Lee.
Yeah. I think you've alluded to the fact that there's been some exits. Some of them, it's probably down to if you're writing a single class of business, the cost benefit is difficult in this market. So.
Yeah, absolutely.
This is a great bit of free advertising for Chubb and Liberty, so I'll make the most of it. I fully agree with Chris. We've been here, I think, from Credit and Political Risk. We've been here 15 years. We've got Julian Hudson in the crowd, who set up the operation here. So, we're fully committed to the region. It's a bit, we've had some exits, as you said, so it's a bit of an interesting time for the market, because we obviously have to say we like a bit of competition, but we don't like too much competition. So it's a fine balance, and I'm sure brokers would prefer as much competition as possible.
We love competition.
Well, not within brokers, but I think the key is that we've been here a long time. We know how to underwrite business within Asia, and whilst this is the real plug. Whilst we're not always the cheapest, we have got a very good rating, and we're here for the long term.
Excellent, that's good to hear, Sam. I can now pass over to the floor if there's any questions you'd like to put to our panel.
Yes, Lee, I've got a couple of questions here from the floor on the app. First one's quite short, second one's quite long. First one is, are SMEs being left out of PRI or credit risk capacity? And the second one is, can we hear a bit more about the change in appetite for renewables and green, in quotation marks, projects? Does appetite and demand for these on an insurance side match the narrative? Match the narrative we've heard throughout this event on ESG? And where, in this context, do the multilaterals and other public institutions come in when it comes to sharing risk? So there's a big question there, and then there's the other one about SMEs. Are they in or out? Or are they being priced out, perhaps, of
Serene,
PRI or credit
one?
risk?
Yeah, I think for SMEs, so when we talk about political risk, I think we have to see there are two different aspects to it, right? For a lot of the SMEs in Singapore, Singapore, I guess, in general, we are not that big in terms of overseas investments, right? So the SMEs don't really build a factory overseas per se, right? So what they are really concerned with really is probably what we call contract frustration. So if you enter into a contract, you're doing supply of works, or you're doing services, and your counterparties overseas, I think that's where they probably would want or would be concerned with political risk. I don't think so much it's about SMEs being priced out or left out, but perhaps the awareness previously may not have been as high. So when we talk to some of our SME clients or even small cap, middle cap clients, I think in the past they didn't even consider this. And I think you probably as a company, it's good to start thinking about political risk earlier, and then from there the costing for the projects would probably come in better. So I suppose the pricing out, from what I have seen, is probably more when they start thinking about certain investments or trades, they didn't factor in the cost, and then maybe along the way, they start thinking about it, and then that's where you have a pricing gap. So I think no harm, as Warren said, come to the market early, speak to your brokers early, and then we can work something out.
Yeah, absolutely. I guess just look on the renewable question. I think it's a very interesting one. I personally have been very pleased and encouraged by the activity and interest that insurers have had in the renewable space. We last year placed the first green to green transaction in Asia Pacific. We also placed the first policy with Tierra, dedicated insurer in the renewable space. So there's a real commitment from the market to support those transactions. And I guess obviously we've seen that here from the insurers. I mean, just quickly from your side, Warren, in terms of renewables and your activity, I assume you're seeing a similar focus from SEB perspective.
Yeah, I mean, I think it's a pretty common theme across the industry, right? There is a focus on green transactions. We've got that focus within the bank, but I think we've also seen the same level of support coming from our insurers. Obviously, these two guys are supporting green transactions when they see those opportunities, and it helps to firm up the capacity that they want to do on a transaction when there is a green element or a renewable element, and it's been seen across the market as well.
Sorry, maybe if I could just jump in, because it links a bit to the SME question. So I think in terms of renewable space and private insurance support, actually, sometimes we think about ECAs and you talk about the offshore wind farms and it's huge and you need ECAs to come in. But I think in Singapore, we've also seen a lot of solar panel suppliers, and also these are smaller projects. One project can be 10 to 20 million. And the people building this, the companies are not your big MNCs. So they're probably your middle cap companies. And we have actually gotten good support from the private insurance market.
Superb. Excellent. Thank you. I think we're pretty much bang on time. Is that right?
Yeah, there was a second...
Oh, there. It comes in.
There was an end part to that question about the role of multinationals and other public institutions sharing risk on those types of projects.
Good question. Perfect opportunity for Sam and Chris to finish us off.
I mean, I'd argue if we're taking risk on the project, we're sharing the risk on the project. So.
I think the question was, are they?
I would say broadly yes. I mean, I don't think we've seen transactions where we don't think they are. I mean, obviously you've got indemnity issues and so forth, but generally I would say for the project financing, they're pretty willing to take a level of the risk, unless you disagree, Chris?
No. I just wanted to talk about the PRI, the SME. I mean, in terms of them not PRI, it's not a commoditized product. It's very specialized, and each risk is incredibly different. So, when we're looking at that risk, our strategy is to work with clients that, there's a repeat business opportunity, and that we know well, and that they really understand what they're buying. So, if it's an SME, then we would look at it, but we'd want to know that there's sort of an opportunity to do more rather than just one-off opportunities. In terms of the renewable and risk sharing, I don't have anything different to Sam's point.
Sorry, just on leading on the SME point, I think one thing we can do is, as Chris says, it's the distribution factor, and obviously we need to work with our brokers, but it's also working with the banks closely, and I think we need to have a better dialogue with you guys, because you will have teams on the ground sort of talking to SMEs, and you can therefore bring a bulk of business to us, as we have done in the past, especially in Singapore. There have been some pretty sizable transactions in the aggregate where hundreds of SMEs have sought financing and we supported the banks. So again, I think it's, given our distribution network, it's a conversation with the brokers and the banks, and we need to be talking to the banks about how we can support them with regards to their SME business, be it PRI or credit.
Excellent. Well, thank you very much, everyone. It was a real pleasure to have my panel here, and I'd like to extend my thanks, and if I could welcome everyone to give them a round of applause. So thank you very much.